The loan officer slid a thick folder across her desk toward me, her expression carefully neutral in a way that immediately made my stomach tighten. I was sitting in a small glass-walled office at Riverside Financial, having been summoned by a vague email about account verification that I'd almost ignored. Now I wished I had. "Ms. Moore, can you confirm these signatures?" she asked, opening the folder to reveal page after page of loan documents. My name appeared on every single one, typed neatly at the top, Catherine and Moore. Below, in flowing ink, were signatures that looked disturbingly like mine. I leaned closer, studying the first document. It was a commercial business loan application dated 8 months ago. The signature matched my usual pattern, the slight upturn on the K, the loop in the E, the flowing connection between letters. But I'd never seen this document before. Never signed anything related to a business loan. Never even applied for commercial credit. "I don't understand," I said slowly. "What are these?" The loan officer, whose nameplate read Patricia Vance, studied me with sharp eyes. "These are 3 commercial loan agreements in your name, totaling approximately $180,000. They were approved over the past year." My vision blurred at the edges. $180,000. "I've never applied for any commercial loans," I said, my voice coming out steadier than I felt. "I don't own a business." Patricia paused, her fingers drumming once on the desk. Then she said quietly, "Then whoever did this knew you very well." Patricia turned her computer monitor so I could see the screen. Numbers filled the display. Account balances, payment histories, credit inquiries. All under my name. All showing activity I'd never authorized. "Your credit score has dropped 90 points in the past 6 months," she explained, scrolling through entries. "Multiple hard inquiries, high debt-to-income ratio, and 1 missed payment flagged last month." I felt cold spreading through my chest. 90 points. That kind of drop could affect everything. Future loan applications, job opportunities, rental agreements. My entire financial identity was being damaged by loans I'd never taken. "The total outstanding balance across all 3 loans is $173,000, Patricia continued, reading the number aloud like it was a death sentence. In many ways, it was. That amount of debt, appearing suddenly on my credit report, could ruin me. I couldn't afford those payments. I'd never agreed to that responsibility. "How is this possible?" I asked. "Your name, social security number, employment information, and signatures all appear on the applications. The loans were approved because everything checked out, on paper." On paper. The phrase echoed in my mind. Someone had created a perfect paper trail using my identity. Someone who had access to all my personal information. Someone who could forge my signature convincingly enough to fool bank officers. My hands were shaking. Patricia noticed. "Ms. Moore, have you been a victim of identity theft before?" "No, never." "Do you know anyone who might have access to your personal documents?" The question landed with terrible clarity. Yes, I knew exactly one person who had that kind of access. Patricia pulled up the first loan application on her screen. "These are business loans," she said, highlighting sections. "Commercial credit lines intended for business operations, equipment purchases, and working capital. The applications list you as owner of a consulting firm called Moore Advisory Services." I stayed at the business name, Moore Advisory Services, using my last name to make it seem legitimate, like it was mine. "I don't own any business," I repeated. "I'm an employee. I work in compliance operations for Western Industries." Patricia made a note. "What does your role in compliance involve?" "I review internal processes for regulatory adherence. I audit documentation, trace approval chains, verify signatures on financial instruments." I stopped, realizing the irony. My job was literally identifying irregularities in documentation and tracking them to their source. "Then you understand what we're dealing with," Patricia said. "This is sophisticated identity fraud. Someone who knows you well enough to forge your signature convincingly. Someone with access to your personal information, social security number, employment history, address. Someone who understands how loan applications work." She pulled up comparison images. My real signature from my account opening documents appeared next to the signatures on the loan applications. They were remarkably similar. Too similar to be random. This wasn't some stranger who'd stolen my identity online. This was someone who'd studied my handwriting, practiced my signature, learned the specific way I formed each letter. Someone close. And in that moment, sitting in Patricia's office with evidence of fraud spread across her desk, one thought crystallized with devastating clarity. My father used my identity to secure loans, and the compliance review would trace every signature back to him. Let me tell you who I am, because the loan documents certainly won't tell you the truth. My name is Catherine Moore. I'm 34 years old, unmarried, and I've spent the past 8 years building a career in compliance operations. I'm methodical, detail-oriented, and trained to spot discrepancies in documentation. I live alone in a modest apartment, drive a reliable used car, and maintain a credit score that was excellent until 6 months ago when it mysteriously started dropping. I come from a small family, just me, my father Douglas, and my younger brother Austin. My mother died when I was 15, and my father raised us alone. He's a financial advisor, always until his practice started struggling a few years ago. Austin is 28, working various jobs, never quite finding his footing. I've always been the responsible one, the one who did well in school, got a good job, managed money carefully. My father used to brag about me to his friends. Catherine's the smart one, he'd say. She's got a head for numbers just like me. I thought it was pride. Now I understand it differently. My achievements weren't something he celebrated. They were resources he could exploit. My good credit wasn't a personal accomplishment. It was an asset he could borrow against. My careful financial management wasn't admirable. It was useful, especially to him. And the worst part? He'd asked for my information once before, about a year ago. He'd framed it casually, like it was no big deal. Katie, I'm exploring some investment options. Would you mind if I listed you as a co-applicant, just to see what rates we could get? I declined, politely but firmly. Dad, I don't think that's a good idea. Let's keep our finances separate. He'd smiled. Of course, honey. Just thought I'd ask. Apparently, my refusal hadn't stopped him. It had just made him more creative. Ms. Moore, I need to ask you directly, Patricia said, pulling my attention back to the present. Do you have any idea who might have done this? I did, but saying it out loud felt impossible. Accusing your own father of identity fraud wasn't something you did lightly. I need to think, I said carefully. I need to review these documents more thoroughly, understand what I'm dealing with. Patricia nodded. I understand this is overwhelming, but time is important here. The longer these accounts remain open in your name, the more damage they do to your credit. And if payments continue to be missed, you could be held legally responsible for the debt, even though I didn't authorize it. Proving you didn't authorize it is the challenge. Right now, all the documentation says you did. Your signature is on file. Your information was provided. From the bank's perspective, these are your loans until proven otherwise. She printed out copies of all the loan documents and placed them in a folder. I'm flagging these accounts for fraud investigation, but you'll need to file formal disputes with the credit bureaus and possibly a police report. I'd also recommend consulting with an attorney who specializes in identity theft. I took the folder with numb hands. What happens to the loans in the meantime? They remain active until the investigation concludes. The businesses they were funding, she pulled up more information, appears to be your father's consulting practice. Douglas Moore Financial Advisory. My breath caught. She'd said it so casually, not realizing the bomb she'd just dropped. The business wasn't even hiding behind a fake name. It was my father's practice, funded with loans taken out in my name. How do you know it's his business? I asked. The business address on the applications. It matches the address of his registered practice. Patricia studied my face, watching my reaction. Ms. Moore, is Douglas Moore your father? I left the bank in a daze, clutching the folder of fraudulent loan documents. Instead of going home, I drove to a coffee shop, found a quiet corner table, and spread the papers out in front of me. I needed to understand exactly what had been done before I decided how to respond. The first loan application was dated November of last year. I remembered that month clearly. It was Thanksgiving week. My father had hosted dinner at his house. We'd spend the afternoon together, eating turkey and watching football, pretending our family dynamic was normal and healthy. While I'd been sitting at his table, apparently, this loan application had been submitted. The timing felt significant. He'd invited me over, acted like everything was fine, and simultaneously was using my identity to secure $60,000. The second loan was dated February, Valentine's weekend. Austin had been out of town, and I'd spent Saturday afternoon helping my father organize files in his home office. He'd been chatty and appreciative, telling me how grateful he was for my help. That Monday, a loan application for $55,000 was approved in my name. The third loan, March, a month when I'd barely seen my father because I'd been traveling for work. This one was different. It was for $65,000 and included documentation I definitely hadn't provided. Pay stubs from my employer, bank statements showing my account balances, even a copy of my driver's license. I studied the signatures on each application. They weren't just similar to mine, they were nearly perfect copies. The pressure was right. The flow was natural. The small quirks that made my signature unique were all replicated. He'd practiced. My father had practiced forging my signature until he could do it flawlessly. I needed to understand how we'd gotten here, how the father who'd raised me had become someone capable of this level of betrayal. So I let myself think back, past the shock and hurt, to patterns I'd been ignoring. Growing up, my achievements had always been useful to him. When I got good grades, he'd brag to potential clients about his smart daughter. When I got into a good college, he'd use it as proof of his own success as a parent. When I landed my job at Western Industries, he'd mentioned it constantly in his professional cycles. My daughter works in corporate compliance at a Fortune 500 company. I thought he was proud. Now I saw it differently. I was a credential he could leverage. My successes reflected well on him, made him look trustworthy and accomplished by association. And when his own career started struggling 3 years ago, when he lost several major clients and his practice revenue dropped, he'd started viewing me as more than just a source of pride. He'd started seeing me as a financial resource. The requests had started small. Could he list me as a reference for a business loan? Could I co-sign on a lease for new office space? Could I provide employment verification for a credit application? I'd said no to everything. Set boundaries. Insisted we keep our finances completely separate. I love you, Dad, but mixing family and money never ends well, I'd told him. He'd seemed to accept it. But clearly, he'd just been planning a different approach. If I wouldn't voluntarily help him, he'd take what he needed without asking. He'd spent years observing how I signed documents, collecting information about my employment and finances, building the knowledge base he'd need to impersonate me convincingly. The memory came back with sudden, terrible clarity. About 18 months ago, my father had asked for my information directly. We'd been having lunch at his favorite restaurant, his treat, which should have been my first warning since he'd been tight on money for months. Katie, he'd said over coffee, I'm exploring some investment opportunities, partnership agreements, that sort of thing. Would you be comfortable if I listed you as a co-applicant? Just to see what kind of rates and terms we could get. I'd set down my cup carefully. Dad, I don't think that's a good idea. It's just exploratory. We wouldn't actually proceed without discussing it further. I'd rather keep our finances completely separate, I'd said firmly. It's better that way. Cleaner. He'd smiled that charming smile he used with clients. Of course, honey. I completely understand. It was just a thought. The conversation had moved on. I thought it was resolved. What I hadn't realized was that my refusal had simply taught him he couldn't ask permission. So he'd stopped asking. He'd taken what he needed in secret, using knowledge he'd gathered over years of parenting me. He knew my social security number because he'd memoized it when I was a child. He knew my employment history because I'd shared it proudly with family. He had copies of my signature from birthday cards and holiday letters I'd sent him. He had everything he needed. and I'd declined to give permission for exactly the thing he then did without consent. The irony was devastating. My attempt to set healthy boundaries had just made him more deceptive. I pulled out my phone and checked the dates on the loan applications against my personal calendar. The timing was even more calculated than I'd first realized. The first loan, submitted in November, had been processed during Thanksgiving week. Specifically, on Thanksgiving Day itself. I'd been at my father's house from noon until evening. I remembered the day clearly now. He'd been on his laptop occasionally, claiming he was just checking some client emails even though it was a holiday. I thought nothing of it. Why would I suspect my own father was stealing my identity while I sat in his living room? The application had been submitted at 2:47 p.m. according to the timestamp. I'd probably been in the kitchen helping with dishes or watching the football game in the den. He'd been sitting at his dining room table, filling out loan paperwork in my name, while I was physically present in his house. The audacity of it was breathtaking. The second loan application, February, had been submitted on a Monday morning at 9:15 a.m. I checked my work calendar for that date. I'd been in a staff meeting. The timestamp proved I was at my office 40 minutes away when the application was supposedly submitted by me. The third loan, March, was filed on a Tuesday at 3:30 p.m. I'd been on a business trip in Dallas. My flight records would prove I was in another state. Every single application had been submitted when I could provide an alibi. Whether intentionally or accidentally, my father had created a paper trail that actually helped my case rather than his. If I'd really been applying for these loans, I would have done it during times when I was available and present. The fact that they were all submitted during times I could prove I was elsewhere suggested fraud. I didn't call my father after leaving the bank. Every instinct wanted me to confront him immediately, to demand answers and explanations. But my training in compliance operations kicked in, overriding emotion with procedure. Confronting him would give him time to prepare a defense. Time to create more false documentation. Time to hide evidence or craft explanations. Instead, I went home, opened my laptop, and began documenting everything systematically. I created a detailed timeline of all 3 loans, noting submission dates, approval dates, and my whereabouts during each. I pulled my work calendar, travel receipts, and even social media posts that could verify my location when applications were filed. I made copies of the loan documents Patricia had given me and compared them to documents I'd actually signed, lease agreements, employment contracts, tax returns. I photographed the signature differences, noting the subtle variations that only I would recognize. Then I drafted a formal identity theft report. Not an emotional accusation, just facts, dates, amounts, inconsistencies. I listed every piece of evidence suggesting I hadn't authorized these loans, wrong business address, applications submitted when I was provably elsewhere, forged signatures that didn't quite match pressure points of my real signature. I filed the report online with the Federal Trade Commission, carefully and dispassionately. I filed disputes with all 3 credit bureaus, attaching documentation proving the accounts weren't mine. And then I filed an internal fraud alert with my own company's security department, notifying them that my personal information might be compromised and asking them to flag any unusual inquiries. I didn't argue my case. I didn't make accusations. I just documented inconsistencies and let the process handle itself. This was what I was trained for, just not with my own family as the subject of investigation. The process I'd initiated moved faster than expected. Within 48 hours, I received a call from a fraud investigator at Riverside Financial named Blake Winters. He'd been assigned to review my case after Patricia's initial flagging. "Ms. Moore, I've reviewed the loan applications and your dispute filing," he said, his voice professional but not unkind. "There are several red flags we're examining. I need to ask you some questions." For the next hour, I walked him through everything. My relationship with my father, his financial struggles, the request he'd made a year ago that I'd declined, the timing of each loan application. Blake took notes but didn't comment much. When I finished, he said, "What you're describing suggests someone with intimate knowledge of your personal information and habits. Family member fraud is unfortunately more common than people realize." "What happens now?" I asked. We initiate a formal forensic review. That includes signature analysis, IP address tracking for the online applications, verification of the documentation provided, and interviews with everyone involved in approving the loans. Will my father be contacted? Eventually. But initially, we gather evidence independently. We don't want to alight potential suspects before we've secured documentation. It was surreal hearing my father referred to as a potential suspect, but that's what he was. Blake continued, the signature analysis is crucial. We'll compare the signatures on the loan documents to verified samples of your authentic signature. If there are consistent deviations, it suggests forgery. How long does that take? Usually 2 to 3 weeks for a comprehensive analysis. But Ms. Moore, I want to be honest with you. This process will be thorough but not pleasant. If your father is responsible, there will be legal consequences. Are you prepared for that? I thought about the 90-point credit drop, the $173,000 in fraudulent debt, the years of manipulation disguised as family loyalty. Yes, I said. I'm prepared. The forensic signature analysis began while I tried to maintain some semblance of normal life. I went to work, attended meetings, completed my usual compliance audits, all while knowing my own identity was being examined for fraud in a separate investigation. Blake sent me a secure link to upload additional signature samples. I provided documents spanning years, employment contracts, apartment leases, tax returns, bank account opening paperwork. Each one represented my authentic signature at different points in my life, showing the natural evolution and consistency of my handwriting. The forensic examiner would compare those to the loan signatures, analyzing pressure patterns, stroke velocity, letter formation consistency, and dozens of other factors that distinguish genuine signatures from forgeries. A week after submitting the samples, Blake called with preliminary findings. The initial analysis shows significant deviations, he said. While the forged signatures are visually similar to your authentic ones, they lack the natural flow and pressure consistency of genuine handwriting. The examiner describes them as traced rather than written, meaning someone carefully copied your signature rather than naturally producing it. Traced. I repeated. Yes, when you sign your name authentically, there's natural variation in pressure and speed. You don't think about forming each letter. You just write. Forged signatures, even good ones, show more deliberate, careful formation. The person is thinking about making it look right rather than just signing. He paused. These signatures aren't just different from yours, Ms. Moore. They are definitively not yours. The forensic examiner is prepared to testify to that if necessary. Relief flooded through me, followed immediately by sadness. Proof that I hadn't signed the documents was proof that someone else had. Someone who'd studied my handwriting. Someone who'd betrayed me. What's the next step? I asked. IP address tracking. We're examining where the applications originated. The IP address tracking took less time than the signature analysis. Within days, Blake had results that confirmed what I already suspected. All 3 applications were submitted from the same IP address, he told me during our next call. That address is registered to a business location in the northern part of the city. The building houses several small professional offices, including Douglas Moore Financial Advisory. I finished. Yes, your father's office. There it was. Digital fingerprints placing the applications at his location, submitted during business hours, from a computer registered to his practice. Combined with the forged signatures, it created an unmistakable pattern. Blake continued, we also examined the supporting documentation attached to the applications, pay stubs, bank statements, employment verification. Those documents are legitimate, but they were obtained through methods that suggest insider access. What does that mean? Your pay stubs match your employer's format perfectly. Your bank statements are authentic. The question is how someone got copies of private financial documents. Did you ever give your father access to your online banking or email? No, never. Then he likely obtained them through other means. Physical access to your apartment, maybe, or documents you'd stored at his house. I thought back to times I'd stayed at my father's house. Had I left my laptop open? Had I thrown away financial statements that he could have retrieved? Had I been careless with my information because I trusted him? Ms. Moore, this pattern indicates premeditation. This wasn't opportunistic fraud. It was carefully planned over months, using information systematically gathered. That matters for both criminal prosecution and civil liability. Criminal prosecution. My father could face charges. The reality of what I'd set in motion was becoming impossible to ignore. While the investigation continued, my father maintained his usual patterns. He called me every week or so, making small talk, asking about work, acting like nothing was wrong. I didn't answer. Each time his name appeared on my phone, I let it ring through to voicemail. Hi, Katie. Just checking in. Haven't heard from you in a while. Give me a call when you get a chance. Love you. He sounded normal, cheerful even, like he had no idea that banks were tracing his fraud, that forensic analysts were examining signatures he'd forged, that his own daughter had initiated the investigation that would expose him. The messages became more frequent as days passed. Katie, is everything okay? You're usually better about returning calls. Honey, I'm starting to worry. Did I do something to upset you? Kate, seriously, can you please call me back? I need to know you're all right. I saved every voicemail, forwarded them to Blake as additional evidence. My silence was apparently making my father nervous, though he couldn't know why. 2 weeks after the investigation began, the tone of his messages shifted. Katie, I heard from Riverside Financial. They're asking questions about some business loans. Do you know anything about this? There it was. The bank had started contacting him. The investigation was moving from evidence gathering to direct inquiry. His next message came 3 hours later. I'm sure this is just a misunderstanding. Some kind of paperwork error. But if you've been contacted about this, we should probably talk. I can explain everything. Explain everything. As if there was an explanation that would make identity fraud acceptable. As if talking to him would somehow resolve the $173,000 in fraudulent debt he'd created in my name. I still didn't answer. Silence had become my most powerful tool. A third loan surfaced during the expanded investigation, one neither I nor Patricia had initially known about. Blake called me with the news. We found another account. Smaller amount, $32,000, opened 14 months ago. It was nearly paid off, which is why it didn't show up in your initial credit review. Nearly paid off? I repeated, confused. How? Monthly payments were made consistently from a business account registered to your father's practice. He was servicing the debt. That was somehow worse than the others. He'd taken out a loan in my name, used the money for his business, and then paid it back, probably using money from the later loans to cover the earlier debt. He'd been juggling my stolen identity across multiple accounts, using my credit as a renewable resource. The payment history on this loan is what helped us establish the pattern, Blake explained. The account access, payment sources, and communication history all point to your father as the account manager. Even though your name is on the loan, he's been operating it. But my name is still responsible if something goes wrong, I said. Exactly. If his business failed and he stopped making payments, you'd be liable. He was using your credit as insurance against his own financial instability. This loan was dated from 15 months ago. I checked my calendar. April of last year, before he'd even asked me directly about co-signing. This had been going on longer than I'd realized. The pattern was becoming clear. My father had been using my identity as a business tool for over a year, systematically creating loans, using my credit, and managing the accounts without my knowledge. The request he'd made at lunch hadn't been his first attempt to involve me financially. It had been his attempt to make legitimate what he'd already been doing in secret. The more the investigation uncovered, the clearer the pattern became. Blake walked me through the timeline they'd reconstructed. Your father's practice suffered significant revenue loss beginning 3 years ago. He lost several major clients, and his income dropped by approximately 40%. At that point, he needed capital to maintain operations, but his own credit was overextended. So he used mine, I said, initially in small ways. 14 months ago, the first loan, $32,000. He used that to cover operational expenses and keep his practice afloat. He made payments consistently, probably hoping you'd never find out. But one loan wasn't enough, I guessed. Correct. As his financial situation worsened, he needed more capital. That's when the larger loans started. November, February, March, each one progressively larger as his needs increased. Blake pulled up a financial analysis. We've tracked the fund usage. The money went directly into his business accounts and was used for payroll, rent, equipment leases, and operating expenses. This wasn't frivolous spending. He was using your credit to keep his business alive. That doesn't make it right, I said. Absolutely not. But it explains the motivation. This wasn't desperation, this was planning. He calculated how much credit you could reasonably secure, spaced out the applications to avoid red flags, and managed the accounts carefully to minimize the chance of discovery. That calculation made it worse somehow. This wasn't an impulse decision made in a moment of crisis. This was systematic, premeditated fraud carried out over months by someone who'd carefully analyzed the situation and decided stealing his daughter's identity was an acceptable solution to his problems. The investigation expanded beyond my initial fraud report. Once Blake's team established a pattern, they were required to examine all accounts potentially connected to the fraud. That meant reviewing my father's entire financial history, not just the loans in my name. We found irregularities in other accounts, Blake told me during a call that felt increasingly surreal. Other clients? I asked, horrified. No, nothing like that. But his business accounting shows other concerning practices. Commingling of personal and business funds, inappropriate fee structures, documentation irregularities. Once we started looking closely, other issues emerged. The investigation had taken on a life of its own. What started as a fraud report about 3 loans had become a comprehensive review of my father's entire practice. Regulatory agencies were now involved. The State Financial Services Board had opened its own inquiry. This is bigger than your case now, Blake explained. Your fraud report triggered institutional scrutiny that revealed systemic issues. Even if he resolves the loans in your name, he's facing professional consequences. My father's career was collapsing in real time, and I'd initiated it. Not through any desire for revenge, but simply by reporting the truth and letting processes do what they were designed to do. I felt no satisfaction in this, no triumph, just exhaustion and sadness that it had come to this. My father had built a professional reputation over decades. He trained me to value integrity, to do the right thing, to follow rules and procedures. And then he'd violated every principle he'd taught me, apparently believing family loyalty meant I wouldn't report him or wouldn't be capable of uncovering what he'd done. He'd underestimated both my commitment to truth and my professional expertise. I worked in compliance. This was literally what I did. My father's response to the investigation came in written form, a statement submitted to Riverside Financial through his attorney. Blake forwarded me a copy. In his statement, my father claimed I'd given verbal permission for the loans. He described conversations that had never happened, permissions I'd never granted, agreements we'd never made. He portrayed himself as a father trying to help his daughter build business credit, acting on her instructions with her full knowledge and consent. According to his version, Blake summarized, "You wanted to start a consulting business but didn't want the hassle of managing the paperwork. You asked him to handle the applications and account management on your behalf." It was creative fiction, plausible enough that someone who didn't know me might believe it. But there was one critical problem. There was no proof. We asked for documentation of these alleged agreements, Blake said. Written permission, email exchanges, text messages, anything showing you consented to this arrangement. There isn't any, I said, because it never happened. Exactly. He's claiming verbal agreements, but in financial services, significant transactions require documented consent, especially for 6-figure loans. The absence of any written authorization is itself evidence against his claim. His statement also included explanations for why the applications were submitted from his office, why he'd made loan payments from his accounts, why he'd been managing everything. Each explanation seemed reasonable in isolation, but collectively painted a picture of someone making up justifications after being caught. The statement was too detailed, too defensive, too careful in its explanations. It read like what it was, a story constructed to fit facts rather than facts supporting a story. His over-explaining, I said, recognizing the pattern from my compliance work. When people tell the truth, they're usually straightforward. When they are lying, they add details trying to make it convincing. Exactly, Blake agreed. His statement raises more questions than it answers. The forensic analysis reached its final stage, side-by-side signature comparison presented in a formal report. Blake sent me the document, and I opened it with trembling hands. The report was technical, filled with specialized terminology about stroke analysis, pressure variation, and formation consistency. But the conclusion was clear. On the left side of each page were my authentic signatures from various documents. On the right were the signatures from the loan applications. The analyst had highlighted specific differences. Note variation in pressure at baseline of letter K. Authentic signature shows consistent pressure while question signature shows hesitation marks. Note formation of letter E. Authentic signature uses continuous stroke. Question signature shows lifted pen indicating separate stroke formation. Note connecting strokes between letters. Authentic signature maintains flow. Question signature shows careful deliberate connection, suggesting traced rather than written formation. The conclusion was unambiguous, based on comprehensive analysis of class characteristics, individual characteristics, and formation patterns. It is the opinion of this examiner that the question signatures on the loan documents were not executed by Catherine Mall but rather represent careful forgeries. Below that, another paragraph. Comparison with exemplar signatures from Douglas Moore shows significant similarities in pressure patterns and formation habits, suggesting the question signatures may have been executed by the same individual who produced the Moore exemplars. They'd compared the forged signatures to my father's real handwriting. The patterns matched. The truth was now unmistakable, documented in a report prepared by a certified forensic examiner who'd staked their professional reputation on these findings. My father had forged my signature. The evidence wasn't circumstantial or suggestive. It was definitive. With the forensic evidence confirmed, Riverside Financial took immediate action. All loans in my name were frozen pending final determination of liability. Blake called to explain what that meant. The accounts are locked. No further transactions can occur, no additional funds can be withdrawn, and no payments will be credited until we determine who's actually responsible for these debts. What about my father's business? I asked. If he was using these funds for operating expenses, his cash flow stops. He'll need to secure alternative financing, and given the circumstances, that's going to be difficult. The freeze happened on a Wednesday. By Friday, my phone started ringing with a number I didn't recognize. When I looked it up, it was my father's cell number. He was calling from a different phone, presumably because I'd been ignoring his usual number. The voicemail was different this time. Katie, we need to talk. This investigation is destroying my business. I can't operate without access to those accounts. Whatever you think happened, we can work it out. Just please call them and tell them this is a misunderstanding. His voice had lost its casual confidence. Now there was strain, maybe desperation. I know you're angry with me. I know we need to have conversations about boundaries and communication. But this, freezing the accounts, getting lawyers involved, this is going to ruin everything I've built. Please. The message ended. I saved it and sent it to Blake. Another piece of evidence. His plea confirmed that he'd been dependent on these loans, that his business couldn't function without them, that the freeze had immediate and serious consequences for him. He'd built his practice on my stolen credit, and now that foundation was crumbling. The call came again an hour later, then again that evening, each voicemail more strained than the last. I never answered. There was nothing left to say. The formal findings came through 3 weeks after I'd first sat in Patricia's office staring at documents I'd never seen before. Blake scheduled a meeting to present the investigation results. I sat across from him in a conference room while he walked through the comprehensive report methodically. Based on forensic signature analysis, IP tracking, timeline reconstruction, and financial flow documentation, we've determined the loans in question were obtained fraudulently using your identity. The preponderance of evidence indicates Douglas Moore as the responsible party. He slid the formal determination across the table. What does this mean practically? I asked. Several things. First, the loans will be removed from your credit report. You're not liable for the debts. Second, the accounts will be restructured with your father as the legal borrower, assuming he qualifies, which given his financial state is unlikely. And if he doesn't qualify, the loans default. Riverside Financial absorbs the loss, though they'll pursue collection actions against your father. They may file civil suit for the fraudulent amounts. Blake paused. There's also the criminal aspect. We're required to report identity fraud to law enforcement. The county prosecutor's office will review the case and determine whether to file charges. What charges? Identity theft, fraud, forgery, potentially multiple counts given the 3 separate loans and the extended timeline. That's not my decision or yours. It's out of both our hands now. I nodded slowly, understanding the weight of what he was saying. I hadn't just reported fraud. I'd set in motion a process that could result in my father facing criminal charges. Ms. Moore, I want you to understand, you didn't cause this. Your father's actions caused this. You simply reported the truth and let the system work as designed. But it didn't feel that simple. It felt like I'd destroyed my father's life. Even though intellectually I knew he destroyed it himself, the emotional reality was more complicated. Blake gathered his papers. Your credit will be restored to its previous standing within 60 days. We're backdating the removal of these accounts to reflect that they should never have appeared on your report. The 90-point drop you experienced will be revised. And my father? That's between him, the bank, and potentially the courts. Your role in this is complete unless you choose to pursue civil damages, which is your right given the harm to your credit and the emotional distress caused. Civil damages. I could sue my father for what he'd done. Add financial penalties to the criminal exposure he was already facing. I didn't want his money. I just wanted my identity back, my credit restored, my sense of safety returned. I'm not pursuing civil action, I said. I just want this resolved. The compliance report was issued formally to all relevant parties: Riverside Financial, the credit bureaus, the State Financial Services Board, and the county prosecutor's office. Blake provided me with a copy for my records. The document was comprehensive, clinical, and absolutely damning. Every signature traced back to my father. Every application submitted from his office. Every piece of supporting documentation obtained through access he shouldn't have had. Every loan payment made from his business accounts. The pattern was irrefutable. My name had been cleared not through emotional appeals or family loyalty, but through methodical documentation of facts that couldn't be disputed. The report concluded, investigation finds that Catherine Moore did not authorize, apply for, or have knowledge of the loans in question. Evidence establishes that Douglas Moore obtained these loans fraudulently using his daughter's identity. Recommend removal of all accounts from Catherine Moore's credit history and transfer of legal liability to Douglas Moore. Further recommend referral to appropriate law enforcement agencies for criminal review. It was done. The truth had been documented, verified, and officially recognized. My father couldn't argue against forensic evidence, couldn't explain away IP logs, couldn't justify forged signatures. His credibility was gone, replaced by a formal finding of fraud. I received notification from all 3 credit bureaus within the week. The loans were being removed from my report, my credit score was being restored, and fraud alerts were being placed to prevent future unauthorized use of my information. The 90-point drop revised. The debt disappeared from my record. My financial identity was mine again. The liability shift was formalized in legal documents that arrived by certified mail. Riverside Financial was transferring the loans to my father's name, holding him responsible for the full balance plus penalties and fees. Given his financial situation, the likelihood of him being able to repay was minimal. The bank would likely pursue collection actions, possibly force the sale of business assets or personal property. His practice was already facing regulatory review that would almost certainly result in suspension or revocation of his financial advisory license. Using client services infrastructure for personal fraud was exactly the kind of violation that ended careers. My father's attorney contacted mine. Yes, I'd hired representation by this point, requesting a meeting. They want to discuss resolution, my attorney explained. Your father is apparently willing to acknowledge responsibility if you'll agree not to support criminal prosecution. That's not my decision, I said. The prosecutor decides whether to file charges, not me. True, but victim cooperation matters. If you refuse to participate in prosecution, the case becomes much harder to prove. Your father knows that. I thought about it. He wanted me to protect him from legal consequences, to prioritize family loyalty over accountability. The same pattern that had enabled the fraud in the first place. No, I said. I'll cooperate with whatever the prosecutor's office decides to do. I'm not protecting him from the consequences of his own choices. My attorney nodded. That's your right. I'll communicate that to his counsel. Whatever happened next would happen. I'd done what I needed to do, reported the truth, provided evidence, and let systems designed to handle fraud do their work. The rest was up to legal processes I didn't control and didn't want to control. 6 months after sitting in Patricia's office learning my identity had been stolen, my life had returned to something resembling normal. My credit score had rebounded to 781, actually higher than before because removing the fraudulent debt improved my debt-to-income ratio. I'd received a promotion at work. Apparently my handling of my own identity fraud case had demonstrated exactly the kind of attention to detail and process integrity that made me valuable in compliance operations. My father's situation had deteriorated as expected. His financial advisory license was suspended pending disciplinary hearings. The prosecutor filed charges, 3 counts of identity theft and 3 counts of fraud. His practice closed. He'd moved in with my brother Austin, unable to afford his own apartment. Through Austin, I heard occasional updates. Dad was working a retail job to cover basic expenses. He was in counseling, apparently working through why he'd made the choices he'd made. He'd written me a letter that Austin delivered, a long explanation of financial pressure and poor decisions and desperation that never quite reached actual apology or accountability. I didn't respond. One afternoon, my phone rang with my father's number. Not a voicemail this time, an actual call I could have answered. I stayed at the screen, watching it ring. Part of me wanted to answer, to hear his voice, to try to understand how we'd gotten here. But I let it ring through to voicemail. When I played the message later, his voice was quiet, defeated. Katie, I know you don't want to talk to me. I know I destroyed our relationship. I just wanted you to know, I don't blame you for what happened. You did the right thing. I'm sorry it took losing everything for me to understand that. The message ended. It was the closest he'd come to taking real responsibility. But it was too late for apologies to matter. Today, I'm sitting in my office reviewing compliance documentation for a different case, a vendor contract with signature irregularities that need investigation. It's routine work, the kind of detail-oriented process review I do every day. But I approach it differently now. I understand viscerally what these processes protect against. How documentation creates accountability. How systems designed to verify truth can expose lies. My identity is secure now. My credit is restored. My career is thriving. I've built a life that's entirely mine, protected by boundaries I enforce without apology. My father faces consequences he created through his own choices. I didn't punish him. I simply stopped protecting him from the results of his actions. That's what accountability looks like. When someone uses your name without permission, you don't need to raise your voice or seek revenge. You let the truth collect the debt. You document what happened, report it to appropriate authorities, and trust that systems designed to catch fraud will function as intended. The compliance review traced every signature. The forensic analysis revealed every forgery. The investigation followed every digital trail back to its source. And the truth, documented methodically and presented without emotion, proved more powerful than any family loyalty or manipulative explanation. I keep a copy of the final investigation report in my desk drawer, not as a trophy, but as a reminder that documentation protects. That truth matters. That sometimes the most loving thing you can do for someone is refuse to enable their worst choices. My phone sits silent on my desk. My father won't call again. He knows I won't answer. We've reached the end of whatever relationship we once had. Sometimes family means accountability. Sometimes protection means letting consequences unfold. And sometimes the strongest thing you can do is simply sign your own name correctly and know the difference when someone else forges it. The truth doesn't need volume. It just needs documentation. And in the end, every signature tells a story about who really signed it. Mine tells the truth. That's all I ever needed it to do.